Coming up this hour, we'll catch up with Julie Biel of Kayne Rudnick with the latest market rally on pause. Alicia Reese of Wedbush ahead of earnings from Netflix later on today. And the former Barclays boss, Bob Diamond, the CEO. He's going to join us as he remains bullish on regional banking. We begin this hour with stocks flat as Wall Street awaits another round of earnings. Julie Biel of Kayne Rudnick writes, investors will continue to overlook government shutdowns and geopolitical tensions as long as corporate profitability is strong. Julie joins us now for more. Julie, welcome back. You've talked about this a million times too. How impressive is the adaptability of management teams across corporate America?
I agree. I think your sentiment is exactly right. If you think of everything that has been thrown at them, it's not just tariffs, right? It's pandemics, it's supply shutdowns, it's huge swings in demand, huge swings in policy. They've really been able to put their ingenuity to good work. Imagine actually how productive they could have been if we didn't have tariffs, right? How they could have really used their ingenuity in good ways, but that's neither here nor there.
Julie, are you seeing this across market caps? Is this something that just management teams at large cap America can handle well and small caps can't? Or are you seeing this across the board?
I think we're starting to see that small caps really struggled with inflation in a way that large caps had more pricing power and they were much better able to maintain their margins. And then the bigger issue for small caps was they were not able to borrow long with, with fixed rate interest. For them, they've been on variable rate debt and they've really struggled under that. I think we've reached the peak of their interest rate costs rising, and now we're in a place where they can finally start to have some earnings expansion just based off of that.
Do you think that's been priced in, or do you think that that's an upside in the months to come?
I think what's interesting, in this rally in small caps is that it's been very localized in super high beta stocks and stocks that don't have earnings. So that's biotech and quantum. The rest of the kind of higher quality scale really hasn't gotten to participate in this rally in small cap in the same kind of way. And so I actually don't think it's reflected everywhere in the same. But of course, I'm going to say that I'm an active small cap manager, and I'm going to say that you need to be selective.
I'm trying to square this idea that you're seeing profits reaccelerate in some small caps, that you're seeing earnings from the large caps come in better than expected, the increase in full year expectations that we're seeing pretty much across the board. And yet one manager after another is saying you have to be cautious. You have to move up in quality. You've got to be prepared for the next shoe to drop. Why? Can you square those sort of distinctions, the idea that we're seeing real optimism from the C-suite at the same time that fund managers are looking for something to get nervous about?
I think it's connected to the labor market. I think we kind of all recognize that the part of the reason why we have had such a strong economy is that we have a consumer who is so willing to go out there and spend money. And that has really propped up a lot of this economy in a really major way. If we lose that, as we're starting to see some degradation in the consumer strength at the low income, it really does ripple through this economy when so much of it is driven off the health of what the retail consumer is doing. So I think that's where people have a lot of anxiety. And look, how many articles are you going to read about a bubble in AI and not start to be a little bit worried when you have valuations as stretched as they are?
Julie, not just a bubble, you call it the AI Pixie Dust that is basically floating around when it comes to the stock market. What vulnerabilities are you seeing?
I was at an AI conference just this last week, and what struck me is how many panels people use the word unlimited. And the word unlimited, when you're in finance, it's a non-word, right? It doesn't really exist. Everything is limited. And if you talk to mega cap tech, they're all talking about how capacity constrained they are, how they need more GPUs, how they don't have enough power, and they don't have enough data. It was strange to me hearing all of this talk about unlimited. And it reminded me, do you remember when cell phone plans went to unlimited, right? I used to call my girlfriend, put the phone down, and just watch TV with pure silence, right? Because we were so excited about unlimited. I'm worried that we're not going to have the most cogent, thoughtful, capacity-constrained minds with AI and CapEx, because there's this thought that if demand is unlimited, I can do whatever I want.
So, Julie, is there a side of the story you're more comfortable with? Maybe you want to buy into the constraints and maybe fade the moves where everyone's talking about investing like their lives depend on it.
Like, I think the thing is that the place where you really want to be thoughtful of is now that we're at this stage of the capacity investment where we're using debt, I think it's really critical to have a keen eye on valuations. It's exciting to see places where there's growth and expansion and we've moved beyond the mega cap tech. But part of the reason why mega cap tech can rally with such strength is that fundamentally those names are defensive, even if you exclude their AI benefits. That's not the case for a lot of other players that are more fringe and adjacent. So that's the place where I think you see the most vulnerability. And you see that in the pullbacks that we've had recently. People really run away from those names because they know they're not as high quality.
Julie Biel with the latest. Julie, thank you. Julie Biel of Kayne Anderson Rudnick.